Hey guys, what's up? Hope you guys are having a great day today, and welcome back for another episode of the weekly market analysis. So hey, I'm finally on camera again. I actually did a few videos on my YouTube channel back in the day, on camera and whatnot, but I have to be completely honest, one of the reasons I stopped was because when I moved into my new house, we didn't really have a lot of room for it. When we moved into the home, we were buying a home. It was our first home, so we were limited on budget and whatnot, and we didn't really get a house with a lot of storage or a massive amount of space. Granted, it's bigger than most apartments, but it's still limited in size. And then once the virus hit, my wife and I ended up having to share the office space, which makes everything, as you can imagine, significantly more crowded. And then we also had a baby, and she's 9 months old now, and yeah, she basically ends up playing in the pack and play right over there in her pack and play and whatnot while my wife and I work. She doesn't stay there very often, and usually it tends to get kind of dicey in the sense that she starts crying, and then we normally, one of us has to watch her while the other one works. But anyways, that being said though, I finally got a little corner here set up. I got my cool little floor lamp from Pottery Barn that we've had for a long time, and I got my cool bear bull statue here as well. So we got some pretty cool stuff going on here, and hopefully we'll develop this area. I got a new camera that's coming in. It's gonna get here within a month, so unfortunately I do have to wait for that, but it should be really, really, really high quality, and I'm super excited about it. It's like a Sony A6400, so it has unlimited recording time, unlike a lot of other cameras out there. So, non-camcorder cameras. So it should be fun. I'm really, really excited. But anyways, that being said, welcome back for another episode of the weekly market analysis. We got a little sidetracked there. All right, so today we got a couple of currency pairs that we're going to be going over, and yeah, it should be pretty fun. And then we'll be, just like at the end of the show, we'll have me talking about something that, is inspirational, or giving my opinion on something, or whatever. So let's go ahead and hop into the charts. All right, guys. Well, hey, welcome to my TradingView profile. This is the first time you are seeing me. This is a new video for me. This is a new platform we're going to be doing where I'm recording me before we hop into the charts. You guys are going to see me in the bottom left corner of your screen there. And so this is going to be pretty interesting for the most part. What's up? So, so what we're doing right now is I always bring you to the home page of my TradingView profile. We're doing pretty good. Unfortunately, this week, though, we did not do that well. As you can see, the first two trades that we ended up taking, the CAD yen. So actually, I said 6 pairs. Let's go ahead and say that that's actually more like 8 pairs, because I forgot I actually took these two trades. I set them up last week, and unfortunately, I didn't really get a chance to post them. A lot of times what I do is I will come in the markets 2-3 times a week. I will place my stops and my targets, my entries, and all that kind of stuff, and then I'll go from there. I will set them and then forget them. Sometimes I'll place them on Friday. I won't come and check them. Ideally, I would come in and check them on Monday. However, in practice with a 9-month-old baby and a whole bunch of other stuff, that doesn't always tend to happen. So with that said, a lot of time, that's kind of how I like to handle my trades. When I'm trading, now I want this to be very clear, and I've said this many, many times. I'm currently not actually trading with real money right now, okay? That's one thing that you guys need to understand, right? I am an aspiring trader, meaning I'm doing what I feel is necessary to do my due diligence. I'm backtesting strategies, I'm creating trading plans, and in the end, I'm trying to get to a point where I can start trading. Now, we've currently backtested, I say we, it's more like me, I've currently backtested over, I think, 4 different currency pairs right now: Aussie CAD, the Aussie USD, the CAD Swiss, and then the Euro Yen. The Euro Yen was not profitable. All the other 3 pairs were. So now I'm testing over the Euro Dollar to see whether that's profitable or not. And we'll just have to kind of go from there and really kind of just play around with it and see. But so far, we've had 3 currency pairs that do show a positive expectancy. So we'll have to kind of go from there and see how it all goes. The Euro Dollar so far in my backtesting is showing me that it looks like it may have a positive expectancy, but in all honesty, we're only into it like around 40 trades, and that's out of 100. So we'll just, I'll keep you guys posted and updated on it, but we'll just have to kind of see how it goes for the most part. That said, let's go ahead and talk about what you're seeing here on the chart. So the CAD yen, if I pull it up here, so as you can see here, what I thought was going to happen, I'm going to go ahead and zoom out here for you guys to see this. So what I actually got to see here was, we ended up breaking above this structure level right here. We violated the structure level, and then we came back down. So I drew my fib retracement tool, and I can't really show you in this little window here. It doesn't allow me to, but you'll get the idea, and I'll show you on the other pairs. So what happened here was I ended up drawing my fib retracement tool from this swing low to this swing high, and I got a 618 fib retracement right here. That's the 618 fib retracement level, okay? And this is when I decided to go ahead and essentially get long. Now, as you can very clearly see in this situation, it didn't go very well. The market just continued to trend down, and it just more or less continued to, end up stopping us out. So while that was depressing, I hate when those happen, and particularly when it happens 2 times in a row, like here on the New Zealand yen, it is unfortunately how trading goes, and unfortunately there's not a whole lot we can do about it. You're not going to win 100% of the time. That's just not trading. It never was trading, that never will be trading. I mean, honestly, in the currency pairs that I've been successful in, I have to be completely fair with you. I only win like maybe a little over 50%. Sometimes it's 51%, sometimes it's 52, 53. It kind of depends on the currency pair. But for the most part, I don't win 100% of the time. That's just not reality. It's just not going to happen that way. I know we all wish and hope it would. Unfortunately, that's just not how it works. So, that being said, on the New Zealand yen, very same situation. We went bullish, we went long. The market violated structure here. You see, we kind of had some consolidation here, and definitely the market hit a lot of resistance level right here. So when we violated that, I thought, okay, I'll draw my fib retracement tool from this swing low to this swing high, get my 618 fib retracement level right here, price level, and then we'll go long. And unfortunately, it just didn't work out. Now, it's important to keep in mind that this is a very, very, very simplistic trading strategy. So unfortunately, there are going to be a fair amount of losers in it. What tends to happen is the more complicated the trading strategy, sometimes, not all the time, but sometimes the more accurate it can be, okay? Now, well, I really shouldn't say that. I shouldn't say it's the more accurate it can be. It kind of depends. But at least when it comes to overly simplistic, you go too simplistic, and then you end up having other problems, like your strategy not really working out, and you end up losing money, and, a whole bunch of depressing stuff, right? So just keep that in mind. It's a simplistic trading strategy because life is complicated, right? Life is so complicated enough as it is. The last thing we want is to overcomplicate things. I mean, I don't know about you, but I always feel like life is too complicated. So if I can reduce that and make life a little bit more simplistic for myself, I'm happy. That's what I like. So for me, I like to keep my trading strategies simplistic and easy. As simple as it can, because when you're dealing with actual real market data, you're dealing with a lot of emotions, and you don't want those emotions to destroy your trading and to sabotage your trading. So what you really want to do is you want to ensure that you are, doing things as simplistic as you possibly can. Now, again, if you want a complicated strategy, I don't have anything against it. I'm just saying, be aware it can cause some problems. That said, let's go ahead and actually hop into the charts. The first one we're going to look at is the Aussie CAD. Again, these are all trades that I actually didn't find this week. The 2 trades that I found this week, these are all trades that I found last week. Okay, so just keep that in mind. Sorry, it's like really hot in here. My computer produces a ton of heat, and as you can probably see here, I feel that I am hot. So I really need to add a ceiling fan in this room, but anyways, we'll get to that later. That said, though, we're on the Aussie CAD right here, and yeah, so what happened here was, I mean, you could very clearly see what happened. We had a break above, close above. We violated the structure level right here. So I drew my fib retracement tool from the swing low to the swing high. Right there. I don't know why that took me so long. And yeah, we have a 618 fib retracement level. It's close enough. We're also kind of zoomed out, So in terms of accuracy, maybe not the most accurate in terms of drawing the fib retracement tool. That said, though, we have a 618 fib retracement level right here. We came down, we touched it, and now we are rallying and we're off to the races. This is awesome. This is so far looking like this is going to end up making me money. However, I will say I've seen this many, many times. We get very close to the target and then we fall and switch direction and end up stopping me out. So, it's not over until you get out of the market, right? You have unrealized profits and unrealized losses. So it's not over until one of your targets gets hit and you are officially out of the market. Well, I say one of your targets, but one of your exits gets hit and then you're out of the market. So target, stop loss, whatnot. That said, though, when we're looking at this, you can notice here that I have a blue line right here, a dotted blue line. Kind of zoom in here for you guys to see it. One of the main reasons I have this is largely because this is when I found this particular trading opportunity, okay? So a lot of times when I come into the market, I don't always find them exactly when they hit the 618 fib retracement. So I actually had to put a blue line here, and I had to say, okay, now that I found it, is it going to hit my target again, or is it going to hit my entry level? And turns out on the next candlestick, it's very difficult to see. Let's see if we can zoom in here for you guys to see this. Let's fatten these candlesticks up. All right, right here, this is when I found it, and then the next candlestick, we actually ended up hitting my entry. We also ended up hitting the entry over here a third time. So this was good. So this is what got me involved in the trade, which was excellent. And yeah. Now we're just kind of waiting to see what's happening. But so far, things are looking pretty good on the AUDCAD. So let's go ahead and close out. Yes, we want to leave the site. All right. Here is another currency pair, another trade that I posted last week. It didn't end up faring out well. Now, when I posted it, the trade was actually up here around the 163.90 level. And that caused some problems for me because I was pretty certain that it was going to end up stopping me out at that point, right? That's what I figured. And I was right. Good thing my prejudices are intact because, I didn't think very highly of this trade and I was absolutely correct. So, yeah, we ended up getting stopped out. But as you can see, the reason I went short was because, the market basically was trending down. It had a bearish trend since around June 15th. Well, actually, no, if we zoom back even further, actually, we've been trending down. We've been bearish since, I'm going to say March. Yeah, it was March 18th of this year. So I figured, hey, we're going to be bearish again, right? So I decided to go, so once we broke below this structure level and we violated this structure, I decided let's go ahead and, get short and see what happens. So we came up, so I did my fib retracement tool from the swing high to the swing low. Got my 618 fib retracement level right here, and I decided to short the market. Now, how I determine stop losses. All right, so this is how I usually do it. I go from the highs, I identify the highs. The high right here was 164.07. I place my stop loss 10 pips above the high, or if it's a long position, 10 pips below the low. Reason I do that is because it usually gives me an over 1-to-1 risk to reward ratio. Actually, risk to reward, so it would be less. Yeah, it gives me 1-to-1, right? A little over 1-to-1. So usually, like in this case, it is a 1.33. That's the ratio, meaning that I have a chance to make 1.33 more than I have a chance to lose. So 0.33 more. So it's not like a ton. It's not like a 2-to-1 or a 3-to-1 or anything like that, but it's enough. Usually it's enough. It just means that these strategies have to be a little over 50% accurate in order for me to actually have a positive expectancy and for me to make money. So it's important to keep that in mind. Just know that, when it comes to trading, this is something you want to keep in mind. This is something you want to consider. You need to consider the fact that you're not going to win 100% of the time. And a lot of traders don't even win 70% of the time. It does happen. There are traders that have strategies out there that are very, very successful and they do win a lot, but most of the time it's not quite as not quite as good as that. a lot of times. But anyway, so there's the Euro Aussie. Unfortunately, we got stopped out, but like I said, but when I posted it, it was all the way up here. Let me actually find it on here real quick for you. Where was it? Aha. So here it is. Here is what it looked like when I originally posted it. As you can see, let's zoom in on this chart. Yeah. As you can see, we came within a few pips of of getting stopped out. So by the time I posted it, I already knew this was going to be a losing trade anyways, but I think it's important that you guys see the winners and the losers, and I'm trying to be completely transparent. I want you to see the losses, because a lot of people will say, oh yeah, you know, there's all these winners and it's all great, but I want you guys to actually see the losses. That said, so as much as it sucks, you know, I already knew that it was going to be a losing trade, so, you know, it is what it is. All right, moving on, let's go ahead and jump to the pound Swiss. So as you can see here, pound Swiss is actually looking pretty good. You know, it's not looking bad at all. At least I don't think that it is. It's looking pretty good. As you can see here, the market violated the structure highs right here, I decided again to draw a Fibonacci retracement tool from the swing low to this swing high right here. Got my 618 Fibonacci retracement level right there, which was great. And unfortunately, we came within pips twice of hitting my stop loss, as you can see. But we didn't actually end up hitting the stop loss, which was really good for me. So we rallied, and so far we're looking like we may actually end up hitting targets. Now, granted, we're also kind of hitting resistance here at the 119.10 price level, so we'll have to see how it goes, and we'll have to see what actually ends up happening there. But so far, it's looking pretty good. So hopefully it will actually end up hitting the targets, and we'll get out of this trade for some money. All right, let's go ahead and jump to the pound New Zealand. The pound New Zealand, this was another trade that I actually posted, a lot like the last one that was purely just a loser right out of the box. This one originally wasn't, but by the time I posted it, it became a loser, and unfortunately I just didn't get a chance to post it soon enough. So here, as you can see, the market violated structure to the upside. We ended up breaking above, closing above, making a new higher close. So as we started to retrace back into structure, I was assuming, like with all these trades that I do, that previous, you know, resistance, now that we broke above it, should become support. Unfortunately, this didn't actually happen in this case, and we just fell through the floor, and I ended up getting stopped out. So that sucks, but that's just how trading goes a lot of times. And yeah, I mean, now I was right in my overall analysis. We did eventually end up rallying here, which you can see, which is absolutely amazing. But we ended up retracing heavily, making a new lower close. This, in fact, was actually a false breakout. Okay, we broke out, and then we put in a double bottom, which then caused it to reverse, and now we're going bullish. So that said, you know, it's just getting caught in the consolidation. This strategy doesn't do very well in consolidation, as you probably have guessed at this point. I mean, as you can see, if you're looking on the charts here, you know, starting from around here, the 192.79 level, we made a new lower close, but then we kind of came up and we kind of just went sideways for a while. Then we broke above, then we broke below, and finally we broke above again, identifying where the market wants to go in terms of directions. So, you know, as much as that sucked, that's just, this strategy gets caught in false breakouts and consolidation issues all the time. And that also said, this isn't backtested on all of these currency pairs. So if you look on the far right here, you have everything from the Aussie CAD all the way down to the dollar yen. This is the dollar Chilean peso. I don't trade that. I just like to look at it from time to time, just because, you know, just to see the inflation rate of the Chilean peso and things of that nature. So but that said though, and also just to see how the US dollar goes against the Chilean peso. So unfortunately, we have a massive amount of currency pair portfolio that we look at, but this isn't backtested yet, right? Like I said, I've only backtested it on 4 currency pairs, and I'm currently backtesting it on the 5th one. So we'll just kind of have to see how that goes. as we continue to move on in the currency pair and the backtesting phase of this. Also, if you're interested in seeing me backtest stuff, if you want to see me on camera more, backtesting this kind of stuff, then hey, let me know. I'll look into creating videos. I just assumed you guys wouldn't want to do that because backtesting can kind of be boring, if you will. So it really can be boring. So I just was under the assumption you guys wouldn't be interested in it. But if you are, let me know, and I'll put something together. I'll actually show you maybe like 30 minutes or something, maybe 15 minutes, I don't know, of the backtesting one. But if you want to know, let me know in the comment section below. And hey, don't forget to like the videos as well. Let's go ahead and keep going. Now we've got the New Zealand CAD. New Zealand CAD is actually a pretty fun currency pair. I swear, all these currency pairs, they have a mind of their own. Each one has like different personalities and different characteristics. It's pretty weird. I mean, these are millions upon millions of traders and investors and like financial institutions, banks and whatnot that are all engaged in the forex market. But they all have like, even though it's the collective, what you see in the charts is effectively the collective decision of every single person that's engaged in the charts, right? That's what the charts are. So it doesn't matter what some talking head on CNBC or CNN Money or whatever says. It doesn't matter what anyone says. Looking at the charts is the only way to identify what's actually going on and what everyone's decision really truly is. Okay? Is this person really buying this stock? Look at the charts, find out. Is the stock going higher? Does this person have a very large position? It may not have been just that person. It may have been other people. The charts don't lie. Now, the charts are difficult to predict and time. Yes, that is absolutely the case. But you can do it. Not 100% of the time, as we've already discussed, but you can do it with a certain level of accuracy. You just have to make sure that you test a strategy and that you backtest that strategy, and then you forward test the strategy in order to make sure that there is a positive expectancy. That said, though, on the New Zealand CAD here, we had, again, a break above, close below. We violated the structure level of 89.47, which was pretty cool. And once we did that, we drew our fib retracement level from the swing low down here to the swing high down up here. Now, why did I draw the fib retracement level from this swing low to the swing high? Why didn't I draw the fib retracement level from this swing low right here to the swing high? This was a relatively decent retracement. You could have done that. I'm not saying you can't. But if you did, and I placed a 10 pip stop loss, 88.63, so 88.53. Let's go down to 53. Would we have gotten stopped out? No, we would not have actually gotten stopped out. So we could have done something around those lines. My stop loss would have been somewhere around here. All right. Looking at the crosshairs, if you look over here on the far right, you know, that's what I'm talking about when I'm saying 88.53. This is where my stop loss would have been if I had done that. Also, my target would have been higher. So, I mean, honestly, it probably would have been less risk. So, you know, that would have been positive. But I decided to, my eyes saw the overall move like this. And trust me, I've taken trades with minor structure levels like this. Sometimes it works out. Sometimes it doesn't. It just kind of depends, honestly, on, you know, the time that you're taking it. You know, like I said, it's all about playing probabilities, guys. It's all about probabilities. So in this case, yeah, it's not the most desirable that this actually happened, right? It's not the most desirable that, you know, that we took the trade down here. I mean, a lot of people will want to take the trades up here at this structure level because it allows them to have an earlier entry. And that's fine. You want to do that. In fact, sometimes I do that in my trading strategy. There's nothing wrong with it. Just backtest it. That's all you got to do. Just backtest it and make sure that you can do it with a certain level of consistency in terms of making profit and whatnot. So, but that said, though, this is where I drew my fib retracement tool. We got the 618 fib retracement level right here, and we came down, and we actually were looking like we were going to hit the target, and then we ended up reversing and we didn't really get that close to the stop loss, but we did break underneath the entry level. Now, what I'm seeing right here is I'm actually going to go ahead and shrink this up real quick. I am seeing this price action, you know, hitting resistance. I'm not seeing a lot of momentum to the upside. I'm seeing it lose momentum. You know, if you look down here on the relative strength index, if you look at the cross, you know, now that I'm hovering my pointer down here, if you look to the far right, you'll actually get to see the number right above there in blue. All right, so if right here we're at 82.47, that is the relative strength index on a 7 period. That said, you know, what that means is that it's going to take the 7 most recent candlesticks to give you a relative strength index number. That number, for me, if it's over 80, I usually go with an 80-20 relative strength index. Most people, I think, go for 70-30. So if it's above 70, that means it's overbought, and it's probably going to start heading lower, and that's bearish. If it's below 30, that means it's oversold, and that's a bullish signal. This is not 100% the way that it works all the time with the relative strength index, okay? Just because something is overbought, oversold does not mean that it's actually going to be bullish or bearish. Sometimes you can be in a very strong bullish trend and you can get bearish oversold signal or overbought signals all the time. Okay? That happens a lot. So don't 100% use the RSI as a decision as to whether or not to buy or sell. Use it in conjunction with other things, and that's the best thing for you guys to do. Again, I don't use it in my trading personally. I like to look at it, which is why I have it here on the charts, but I don't actually like to look. I don't like to use it all the time. So that said, though, we are overbought. That is a bearish signal. So this we'll see this come down a little bit. And then if it's going to rally, it could come down a whole heck of a lot, and then it could rally. It could come down a little bit and then rally, or it could just go down and end up stopping me out. Totally could happen. Anything could happen. This is forex trading. So, I mean, honestly, we made a new lower, low, lower close with regards to this immediate structure right here, and this could just be a retracement from that low, and this could just, continue going down from there on out. So you never really know, but so far, things are looking good, and we are, profitable. But I think we're going to get stopped out on this one overall. I really do. I don't think that this is going to result in a winning trade for us, but, I say us, I mean me. I don't think this is going to be a winning trade for me, but we'll just have to see. Now, granted, it's important to know, if you're just joining me, this is all just hypothetical. I'm not actually using real money here. Okay, I think I pretty much said that at the beginning of this. This is all hypothetical, not using real money. Keep that in mind. So when I say I'm making money, making losses, I track everything on this Excel sheet. If you look to the screen right here, I track everything on this Excel sheet. As you can see, we started with a $3,000 account all the way up here. And actually, let's look at the equity curve. This is always fun. I love looking at this. So we peaked up here at $38.91. 38, we were almost at $4,000, and then we just started to fall, and now we're sitting at 1166 was the lowest one. So it's not doing well. Again, there's a lot of currency pairs on here that do not have a positive expectancy, but as I've stated many times, I haven't back tested it. If I was to back test it, that probably would change things. Okay. So let's move on to the last currency pair, the Aussie yen. The Aussie yen is kind of flat a little bit. We're just kind of going sideways. We did break below. Actually, we didn't break below, close below here. What we did do, though, is, like I said here, we broke above structure right here. We violated the structure level. We came all the way up, and then we started coming all the way down. And as you can see here, what you see is you're seeing the market bounce off. Sorry, it's actually difficult to see. We're going to close that up real quick. What you're seeing is the market is bouncing off this support level. And now it's broken below. Well, actually, it hasn't technically broken below the support level quite just yet. But it's bouncing off the support level. Why? Look left. Structure leaves clues. And when we look left, look at this. Oh, look at that. Lots of resistance. This support level was a resistance level at one point in time. We hit it 1, 2, almost 3, almost 4, so 3, 4, 5, 6, 7 times this resistance level was hit if we look left, and now we're bouncing off of it. Now, what does that mean for us in this trade? Uh-oh. I accidentally moved this down. All right, sorry about that. So what does this actually mean for this trade? I actually kind of messed up this whole risk-reward bullish tool that TradingView gives you. I don't even know what else you call it. It's a you know, a long position tool. So I accidentally messed it up and everything. So, okay, what does it mean for this particular trade? What it means is that, you know, really, there's a possibility, a probability, if you will, that we could rally and we could end up making money. There's also a probability, though, that we are kind of going lower and a little lower here, you know, a little lower and a little lower every time. So there's the possibility that this could continue lower and end up stopping us out. If we zoom out on the charts, which is important to do, okay, we can see that we are bullish. You know, we look at what's happening. How do we identify a trend? We talked about this many times on the channel. How do we identify a trend? We identify a trend by identifying whether the trend is going, whether the price action is going from the bottom left corner of the screen to the top right. Okay, that would be bullish, or from the top left to the bottom right. That would be bearish. If it's going sideways, then it's consolidation. You know, it's just channel trading. You know, it's trading within a channel. It's consolidation. That's generally what's happening. So, but that's not what's happening here. What's happening here is that we are absolutely 100% going up. So this is bullish. We are going from the bottom left corner of the screen to the top right. So we are bullish. So I have a tendency to think, now what happened here? We came up, and we look left, structure leaves clues, we hit a big resistance level. And that's what's keeping us from going higher. So what the market could be doing is coming down, accumulating momentum, and the market could rally, break the structure level, and end up making us money. That could be what happens. But again, in trading, nothing is certain. We never know. If we look left even further, let's see, any more structure? Let's go to the 4-hour chart here. You know, not really. If we look left, there's really not a lot more structure than, you know, this right here. We kind of miss structure level right here and here. There is this big bearish move right here. But, I mean, that's not really a structure level per se, so I wouldn't really go off and say that that was it. So, in reality, no, we don't really have. If we go out to the daily, I'm sure we'll find some stuff on the daily. So, okay. Was this a whole candlestick or was this like a wick here? It's hard to tell. When you zoom out, all you see is one red line or one green line. You don't always know whether it's a candlestick or an actual body of a candle. So it's important to zoom out, to zoom in to see. So this is just a candlestick wick. This is just the wick of the candle on the daily chart. So that would be classified as a test of the price level, and then it got rejected. If you can look back further here, we have two other situations where the market ended up testing and ended up ended up getting rejected again. We look back even further. Again, we had a test here, test here, test here. So yeah, there are actually a few tests. If you zoom out to the daily, there are actually a few retests of this price level. So yeah, that's pretty good. Well, of the entry level, okay, of the actual target in terms of that resistance, we do still have some retests right here. You know, 1, 2, 3, 4. 5, I wouldn't consider this to be a retest because it broke below. I mean, a slight break below I would consider to be a retest and something that got rejected. But if it broke heavily below, kind of like in this case, I wouldn't say that is a retest. So this looks like this could be a wick here. So if that's a wick, then that could be a retest. So, and there's retest right there, retest right there, retest. So you guys get the idea, right? Look left, structure leaves clues. My mentor hammered this into my brain over and over and over again, and it's something that I do today. You want to find where support and resistance levels are? Look left, structure leaves clues. So, yeah, makes sense, and it works. So, all right, well, hey, that is the Aussie yen, and yeah, so far, I mean, we don't really have an answer as to what's going to happen. Again, we're playing probabilities. And for what I'm seeing, anything could happen at this point. I'm seeing that we're hitting support levels, but that doesn't always mean that support level is going to be valued. It could very easily be violated. Happens all the time in trading, okay? So just because you have a support level doesn't necessarily mean it's going to work out. So just to keep that in mind. All right, well, that's going to conclude the charts for now. Yeah, so that was the trades that I had for the week. And of course the two trades down here. So yeah, that's that's all she wrote. All right, guys. Well, hey, that's going to end this episode for today. I hope you guys enjoyed it. I'm happy on camera again, and yeah, it's going to be great. I'm going to be making this a normal thing from now on. Anytime you guys see me, I'm going to try to be in a camera, or going to be try to be on camera for you guys, so you guys can actually see me, and you get to know me a bit more. I get to know you. So I think it creates a level of trust, and also I think it creates a level of just, it's more personalized, right? You guys get to see who I am, and you get to see, you know, what I'm doing, what I'm all about, what I look like, and whatnot, and it'll be great for both of us. That said, though, guys, when it comes to trading, you're never going to know 100% of what's going to happen in the markets. So this is why you need a trading plan. This is why you need to backtest that trading plan, and you need to forward test the trading plan before you start trading real money in the markets. I don't care what anybody says. If you didn't do this, you're not treating it like a business. And that's what trading is. I've said this many times. Trading is a business. But more importantly than that, why are we doing this? You know, why am I a trader? Why am I even spending all my time doing this kind of stuff? And I want to, in reality, guys, the reason I'm doing this is because it is my goal to become financially free. Okay? Financial freedom, to me, means controlling the source of my income. Trading is one way of doing that. So there are many, many different ways of becoming financially free, but trading is one way of doing that. So it's important you guys understand the purpose of why I'm doing this. I'm also doing this because I want to share with you guys my journey to becoming financially free. And my hope is that when you see me go from zero to hero type of thing, you will get a lot out of this as well. You will be able to mimic what I'm doing, or maybe you'll be motivated and inspired, and you'll be able to learn a lot of the stuff, the mistakes, and a whole host of other things. And that's the main reason why I'm doing this, is because I want you to see my journey. Because so many times, you know, financial gurus, traders, they come onto the market and they tell you all of these, all kinds of stuff, right? And they tell you that, hey, I'm already making money. That's great. That's awesome. And, you know, you should buy my course. But you don't really know. Are they being honest with you? You didn't get to see them go from start to finish. So how do you really know that they're being honest? Well, they offer you free courses, they offer you free education, they try to build that trust level with you. That's what I'm doing here. But I'm being honest with you. I am not a consistently profitable trader. I am not financially free. Okay? The way I'm making money right now is, well, I'm not making anything right now. I've made a little bit of money here and there with options trading, but that was before I really got into the whole, you know, back testing and forward testing type stuff. I'll be honest, I knew that I should do those things. I decided to ignore that, and I decided to trade. I actually ended up making money. I took a $1,000 account all the way up to $1,500, so 50% return is pretty good. And not with a massive amount of money, but it was good. But I decided, look, I know what I'm supposed to be doing here, and I'm not doing it. I need to backtest my strategies. Okay, and that happened in the past. And then I decided to come here to start creating YouTube videos and to show you guys the journey, to show you guys the backtesting journey, to show you guys the creating the trading strategy and the trading plan journey. I mean, the whole thing. And we're going to be doing a lot of other videos here. We're going to be talking about personal finances. We're going to be talking about investing. But for the most part, I really love forex trading, so that's definitely what we're going to be talking about. We'll even be talking about options trading as well. But guys, this is my journey to becoming financially free. And I would like to invite you to join me. Become financially free with me. Okay? And that said, guys, I think that it's incredibly important, because if you are financially free, you can, by controlling the source of your income, that is the only way to truly achieve real freedom in life. All right? You're not going to achieve real freedom in life by working for somebody else, making that person rich. You need to work for yourself. Okay? You need to control that source of your income so that when bad times happen, like the economic crisis that we're going on right now, we are currently in a recession. And if that gets worse and worse and worse and more people get laid off, you'll be okay because you control the source of your income. You control the product or service that you have created or selling to people. You can determine whether or not you're going to increase prices or lower prices. Or if you want to do it via forex trading, then, you know, you can make money in the markets. It's that simple. You can come in, make money, put money in, take money out. If you do that though, you need to control your finances well so that you can acquire the savings necessary to build up that trading account. Because I'm going to be honest with you, trading isn't always, it's not a get rich quick scheme. I shouldn't say it isn't always. It isn't a get rich quick scheme, okay? Straight up, it's going to take you a long time to grow a trading account. A lot of people don't want to tell you that, but that's the truth. It's going to take you a while, okay? There's no guarantees in this. So you need to keep that in mind. You need to understand that if you want to go with the trading, you need to build the account up a lot so that whatever kind of return that you're getting, you can exponentially grow it by adding more money to it. Treat it kind of like a savings account, right? Just make sure that you're managing your risk so you don't blow it. And hey, never, ever, ever risk money in the markets you can't afford to lose. This is one of the things I don't understand about retirement is that they tell us, never risk money in the market that you can't afford to lose. Never risk money in the market that you can't afford to lose. I know I just repeated it twice, but, you know, whatever. Bit of a goofball that way. You get the idea, though, right? They tell us that all the time, yet they say, put your retirement money in the stock market. Oh, I don't know. Can you afford to lose your retirement money? How long did it take you to save up that kind of money? 30 years? 40? And yet you're putting it in the stock market. You're putting it into an ETF. You're not looking at it ever again. You might want to rethink your strategy a bit. Okay, active investing, I'm all for that. Passive investing, I hate. I hate passive investing. Okay, never risk money in the markets that you can't afford to lose. And you can't afford to lose your retirement. I'll tell you that right now. Now, I don't believe in retirement personally. That's just not something I believe in. I believe that you need to ultimately work, just constantly work. I do believe that as you get older, you should get to a point in your life where you don't have to work as hard as you were working when you were younger, right? So maybe you can pass off more work to younger people and things of that nature. So you've got to kick back and relax, you know, and just enjoy life. But to be completely fair with you, I feel as though retirement is nothing more than a sham. Never has it ever existed in our world. It's a very, very, very new concept. And a lot of people think it's a right. And it's not. Retirement is not a right. Okay? And in the end, I don't believe in it. So that's just me. So I don't think you should be risking your retirement money in the stock market. And I don't think that you should be, you know, if you want to take a certain amount of money and you want to set it aside so that you could play around with the stock market. Here's another thing. Why is it considered that investing somehow is not speculation? You know, if I'm a trader, which I am, I'm an aspiring trader, what I do is considered speculation. But for whatever reason, investing isn't considered that. Why? Why is investing not considered a speculation? It is. You are because, you know, maybe in the short term, you're not intending for it to go, you know, buy something low and sell something high, but you're doing it in the long term. That's still long-term speculation. It's still speculation. I don't understand that. It doesn't make any sense to me. That's it, guys. Whoops. Don't risk money that you cannot afford to lose, because there is a very high chance you will lose it. Trust me. When I first started trading with real money, it actually wasn't in options. It was in penny stocks. I got one penny stock, lost $177. It was a pink sheet, meaning that it was a very, very low traded stock, very low volume. Volatility was, in all honesty, goes from very, very low a lot of times, and then all of a sudden spikes. And I got caught in that. But that being said, though, I way overexposed myself, and I ended up losing $177. I know that's not a massive amount of money, okay? But still, $177 it's a lot of money to some people, okay? And in the end, I'm just trying to tell you, you're going to lose money, okay? Even with options trading, I lost money, all right? So I ended up coming out, and I ended up making a lot more than I lost. But still, the point is, never, ever, ever risk money that you can't afford to lose. And if you don't have any money, then you need to start saving. You need to spend less than you make so that you can save it and invest it in your trading account. Think of it as investing in your skill in trading, okay? So that's what you guys need to do. Never risk money you can't afford to lose. So, moral of the story for today, that's what I'm going to end this episode as. I'm going to say that. I'm going to end it there. I think that's a very, very good message that we all need to understand. Just be careful about how you're managing your finances. Be careful about how you're managing your risks, because no matter how safe and secure you think you are, there are always risks. Okay? Safety and security does not reduce risk. There's always risks. You can't ever get rid of risk. Many people are risk averse, can't get rid of it. So keep that in mind. No matter how safe and secure you think you are, there's always risks. So that being said, guys, hey, if you want to support me on the channel here, I've got a few affiliate programs that you can go do that with. I've got TradingView. We just looked at it on the charts. If you guys are interested in that, go check out the links in the description below. I've got TradingView. I got Tier 1 Trading. Guys, TradingView is by far the #1 charting platform out there. I absolutely love it. I use it all the time. Use it all in my videos. It's a great charting platform, guys. And their subscriptions start at like $19 a month, I think, for an annual subscription. It's really cheap. It's not that expensive, and it's really, really great. So if you're interested in TradingView, go check that out. And you want a great charting platform, I mean, they're awesome, they're easy to use, and they're user-friendly. That said, though, if you guys want to learn the skill of trading, here I'm trying to teach you the basics, right? I'm trying to show you my journey, so I'm trying to teach you the basics of trading, how to read a price chart, how to use Fibonacci's, how to make a trading plan, and how to keep that in a back-tested trading journal, things of that nature. That's what I'm trying to do. But if you guys want to learn more in-depth knowledge of how to trade, you want to learn advanced patterns, money management, a whole host of things, then go check out Tier 1 Trading, guys. Tier 1 Trading is an absolute amazing place to learn how to trade. In my opinion, they're the #1 place that you can go to learn how to trade. They've got guys like Akil Stokes, Jason Greystone, Charles Miles. These guys are the trading coaches. They're absolutely amazing, and they won't turn you down a wrong path. I've said that many, many times. They're really great. Guys, before I met these guys, I had no idea what the heck I was doing. I was lost. I was trading, and I would look at charts and I would just get headaches, and I just wouldn't know what was really going on. That was up until I found Akil Stokes, Jason Greystone, Charles Miles, even Jason Stapleton. He's not trading anymore, but he was at one point in time. But this is how I did it. Okay? I found them. They taught me the art and the skill of trading. They taught me how to manage my risk. They taught me lots of different strategies. They didn't just teach me how to trade one strategy, which happens all the time. I'm going to tell you a real quick story. I had a friend of mine who was learning options trading. Love this guy. Still a great friend to this day. He's one of my best friends. And he was learning options trading, and he bought a course for like a lot of money to kind of protect him and all that kind of stuff. I don't want to say exactly how much. It was a lot of money. Okay, it was a lot of money to most people. It's a ton of money that he spent on this. And unfortunately, he followed it, and they only taught him a strategy. They taught him a little bit of market analysis and stuff of that nature, but for the most part, they taught him a strategy. And he ended up bringing his account from $30,000 down to $1,000. I don't know about you. That's insane. So, guys, look, it's important that you go with the right people. It's important that you get trained by the right people. It will seriously make or break you. Again, to be clear and to be totally transparent, when he lost all the money, he wasn't following the rules of the strategy that he was taught. But he also wasn't taught to backtest to build his belief in the strategy. The reason that he violated those rules was because he wasn't taught how to trade correctly. Tier 1 Trading won't do that to you. Tier 1 Trading will teach you. I don't care what strategy it is, backtest it. That's what Tier 1 Trading is going to say. Backtest it. They're going to show you how to backtest it. If you want to learn how to backtest, come to me. I'll show you. I've got videos on it. But they're going to teach you how to create a strategy, how to backtest it, and they're going to teach you a whole host of stuff. They will teach you the skill, not just a trading strategy. They will teach you a skill of trading. Okay? I think that's incredibly important. So that said, guys, hey, I hope you enjoyed the video. If you did, make sure to like the video and subscribe to the channel. And hey, if you really, really like this kind of stuff, then please do me a favor and share it. Share it with as many people as you possibly can. Okay? Share it with as many people out there, and let's help grow this channel. Let's help grow this idea of financial empowerment, financial freedom, controlling the source of our income, becoming truly free. Let's spread that message to as many people who are willing to listen. So guys, if you'll do all that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.